Alright everybody, it's another week, the second complete week of the month, and yeah, actually no, the second has already passed, so we're on the third week now out of 4 weeks of the month. Time actually flies when I think about it. And I'll be making a weekly outlook video as usual, and yeah, there's not much else I can add here but to the intro, but let's just get into it. But before I do, I know I don't really ask for this as much as I probably should. I don't really do it for the sake of others. I started this YouTube channel because I wanted to document my process, my progression as well, and a way to have my journal out there, you know, to be easily accessible whenever I need to. So yeah, that was my main focus until people somehow just started finding the channel. So yeah, I can't complain too much, but I can say if you do like the content, if you do like this video, please do not forget to smash that like button, subscribe if you haven't already, of course, and let's just get into it. So starting off with the dollar index, looking at the daily time frame, we do know that that's my sell side target, sell side liquidity target, and I thought this last week being CPI week, we're going to get some sort of expansion. If someone showed you this piece of price action and said this was actually CPI week, you probably wouldn't believe it. And the fact that all this expansion to the upside happened without any news any liquidity injection, no volume injection, no news, no crazy news actually came out for this to happen, probably unreal, right? But it made sense. If we had a big expansion week the first week of October, we should expect a consolidation or a reversal week in the next cycle. So now that we're back in the third cycle, I'm expecting another expansion similar to this one. So it's either we continue higher or we continue lower, but there's gonna be an expansion. And when the markets are trending, it's a lot better to work with because you know the direction that you're trading at, taking it to each PDRA one step at a time, than not knowing where we're going and always constantly guessing where we could be going. So now let's start off with the monthly time frame. On the monthly time frame, we should recognize and remember that we are still currently inside of this monthly CB. Another thing interesting, because we're looking at the monthly perspective, right? Something I find interesting is the fact that we have November 5th next month, which is the US elections. Makes me wonder and think if November is just going to be a bearish if November is just going to be a bearish month. Is November going to be the one to take out the sell side liquidity? But at the same time, I don't know if that's going to be a good thing for the US economy, because everybody will be praising on how we are going to be bullish on the dollar, how the dollar is going to be gaining strength and stuff like that. And I think, and I believe it's going to be a bit weird to find it dropping after the elections. But it's not something unreal, it's not something unbelievable, so I'll be waiting to see how price plays out. I'm saying this now because we have basically 2 weeks left in the month of October, and we are going into one of those 2 weeks right now, this night. So DXY monthly chart, we are currently inside of the monthly CB. I would like to see how this next week expands. I would really like to see, you notice how the body of this candle is currently somewhat below the 50% mark of the CB. I would like to see it become a long wick by the end of this coming third week of October. I'd like to see it to be a rejection candle in a way, showing an expansion to the downside, so that on the fourth week going into November, it wouldn't be too surprising for price to drop. Then after the election, for price to start pushing back up, because we shouldn't forget that on the yearly time frame, that sell side liquidity is just another gap. It's just another yearly gap right here. So it wouldn't be too surprising to see the elections be the one to start the expansion to the upside. So that's why this third week for me is critical on the dollar index. Now let's go back down to the daily time frame. On the daily time frame, I consider liquidity above the 50% to be very critical, very sensitive. So let's measure out and see the 50% of this year basically. So we got the high created in the month of April and the low created basically last month in September. And we can see the only liquidity above 50% right now is this swing high right here. And it's the only one that I can see on the daily time frame that's still within the purple area, which is the monthly gap. So right now I have this buy side liquidity highlighted. Yes, I know that we have this one here, right here. I know that there's this one, but this is the only one above 50%. So I'm paying more attention to this one than the one below. Let's set an alert there. Now, next thing, let's remove this now that we know where the liquidity is. When we go ahead and zoom down to a lower time frame, excluding this massive run to the upside, just pretending it's not there, we can clearly see that price is currently bullish right now. We can see that we are creating bullish inefficiencies and price is pushing away from those inefficiencies. Let's delete this line. We can see we're creating bullish BCs and price is pushing away. And right now we have another inefficiency right here, a daily one right there, tiny one. So we could, based on logic and the data that we have already, we could expect price to retrace down back to this BC, then continue higher to that buy side liquidity. What happens after the buy side liquidity, I don't know. I'm not going to try and predict it, but we could see a reversal from there, you know, or price could just decide to start tanking from here, making this to become the swing high, and we just start melting off. So the conditions that I'm waiting for, obviously when we tap into this BC, I would like to look for lower time frame confirmations like SMT divergences and market structure shifts on the 1 hour or something like that to take it back up from internal range liquidity to external range liquidity. So I wouldn't just blindly buy this. I would look for a lower time frame confirmation to try and buy it. But if price is going to remain bearish and price is going to start pushing down, I would wait and look to see if we can close below this daily swing low. So I'd like to see us start disrespecting BCs and swing lows. So when we start breaking and closing below these levels, we can look for possible retracements to now start selling back down to our original target in that yearly gap. So yeah, I would wait to see if a swing low can be disrespected and PDRAs along the way getting disrespected for us to be considered bearish. For now, price looks bullish until we reach that 50% liquidity. So that's what I'm looking for going into next week. I don't have any clear bias, I guess. It's an if then statement. I don't really try to predict that or assume that I know what's going on, because at the end of the day, we're all working with probability. At the end of the day, every trading strategy works. It's not your technicals, it's never the technicals, it's never your knowledge or fundamental understanding of the market. It has nothing to do with that and everything to do with you. It's about what you do when you take a loss. It's about how you think when you take a loss. It's about what you also how you also react when you have a profitable day or profitable week, and how you manage those emotions, because I can never tell you to have no emotions at all. I can never say what some people would say, where they'll say something like when you win, you have no reaction. When you lose, have no reaction. It's just business. We move on. We take whatever we take and continue as if nothing happened. That's not, I don't think that's true personally, just because we are human beings, we're emotional beings at the end of the day. We can't just keep saying, let's just move on as if nothing happened. You just made your biggest day of the year. You just made your biggest day of the week. That's something to celebrate. That's an achievement to pat yourself on the back for. You know, we can't just pretend that doesn't exist. So I think, and I believe, and I stand by the belief that we are emotional creatures and we should celebrate these wins and, of course, grieve these losses. At the end of the day, it's all about how you manage those emotions. So say, for example, you have a profitable week or you had a profitable day. The question should always be, have you been sticking to your rules? Have you been sticking to your set parameters? As long as you've been minimizing risk, as long as you've been trading on days you should and not trading on days you shouldn't, I think and I believe that you are going to have a profitable future eventually. So when you do have those profitable days, it's worth it to celebrate them. When you have those losses, it's worth it to journal them and learn from them. Not discard them as if they never happened, not throw it away in the bin as if that's not something to avoid in the future. You journal these experiences because you need to go back to them and learn from them, while again trying to minimize losses, trying to minimize exposure to the markets, especially when the conditions are not right. So I again believe and stand by the fact that we are emotional creatures, and you should be emotional about the markets and about whatever trades you're in, but not extremely emotional. If you enter a trade and your heart is literally on the screen and your every fiber of your being is literally feeling like you can't contain yourself, then you're most likely over leveraged in that position. Of course, sometimes it's about the fact that you're close to maybe passing a challenge, maybe getting a payout. So that could also make you glued on the screen even though you're not over leveraged in a position, or some personal matters at home, of course. But at the end of the day, as long as you've minimized your risk, I believe and I think that I believe and think that it shouldn't be something to, let me just move this aside. It shouldn't be something to even be stressing about. Anyway, I don't even know what I was talking about there, but let's just continue with what we're talking about here. So we have euro dollar on the other side. We have created a daily CB, just like dollar index has created a daily BC. I am looking for the same idea of a pushback into this daily inefficiency, then a run to the sell side. So basically the opposite. So it's an internal to external range liquidity taking the previous week's low. This is all I'm looking for. So I'm looking for a retracement into that gap, then pushes here. We also see the SMT that we have with GU within this daily gap, daily CB. SMT, GU did not take this high, so we got an expansion. Maybe you are waiting for a double confirmation. This would be a double confirmation entry. So your setup would look something like this. A tap into the gap, stop loss at the previous swing high or the top of the gap itself. So you can either have your stop loss here or your stop loss at the swing high, targeting the external range liquidity. Of course, I don't trade with the daily time frame, but for those that do, would probably have a setup that looks something like this, you know, and there's nothing wrong with that. Maybe you could aim for that external liquidity, because notice something about this external liquidity. We do not have any inefficiencies besides the one that we reacted from. So basically we have something like this. How did they draw it? They draw something like this, yeah, like unswept liquidities that are residing there. Just ignore the arrow, but yeah, these are all uncleared liquidity levels, so it wouldn't be too unrealistic to see us test this swing low inside of this inefficiency, because we have this inefficiency right here. So maybe a test of the consequent encroachment is even possible, but we don't know. One day at a time. Cannot predict too much into the future, but this is what I'm expecting. Internal to external range liquidity run. Going down to the, let's take this here to the hourly chart. To the hourly chart, I was actually planning a trade last week, but I never got a feel, of course. So I know there's too many lines here, too many alerts here, so I'm just gonna clear this box firstly, clear this one secondly. Then we are going to keep in mind that this line is the top of the gap and this line is the bottom of the gap that you saw on the daily time frame. I don't know how to distinguish between that, but just know between the two yellow lines, the two main yellow lines, is where you would find the, okay, I don't know why this is, yeah, like that is where you'll find the daily gap, daily CB. So I am looking for a sweep of the previous daily highs. Firstly, we have these relative equal highs here that were created on Friday. We have Thursday's high there. Of course, that's the one that created the gap itself. Last week's price action was actually very nice from here. I could go through the whole of last week's price action, the SMT we had, the order block that I actually took an entry on. I sold this to the sell side liquidity, where it cleared. It started consolidating, waited for the next day. Next day was also nice because we created this imbalance, pushes up, displaces down, inefficiency, clean entry here as well during the silver bullet hour in the New York session. Then we just displaced again going into the end of the day. So when lunchtime happened during New York, you could consider closing it, especially if you're not holding overnight. Then here we had news. I believe it was CPI. Yeah, we had CPI just basically gyrate, didn't do much. This is insane for CPI in my opinion, but I think this happened because we had unemployment claims and CPI on the same day, and considering the fact that NFP already had a big ranging day, NFP basically did what CPI would have done. Let's just put it that way. So they switched roles this time. NFP moved one direction without any manipulation, and CPI was the one that actually manipulated both sides of the market and still consolidated in the end. So yeah, this is the trade that we are used to when we are trading NFP. We can get some crazy manipulations, then maybe run to one side or consolidate. But this time it's NFP, it's CPI that did that. So anyway, I'm looking for a setup that looks something like this. I know I'm basically giving a signal by doing this, but I'm not a financial advisor. I have to put it out there. I'm just a dude doing whatever I'm doing to make my ends meet. So yeah, I would say whatever you do with your money, that's your money. So if you are going to be consulting a professional, which I think you should probably reach out to one before you take any trades like this. So I'm looking for a sweep of liquidity, a time-based sweep. So open up at midnight, open up in the new week, and then I would like to see a manipulation higher above the weekly open and above the daily opening, going into that gap. I don't know how deep it's going to go. Then I would look for some sort of shifting structure to take it back to the previous weekly low. It's a very simple procedure: daily IRL to ERL, SMT on a lower time frame, confirmations on a lower time frame, which is the 1 hour. Then I'll play from there. So nothing too crazy. I'm just looking for structure here to determine where I'm looking to go next. And of course, if you don't know already, I will be making intra-week updates. If you check the channel, you'll see some videos of mine are labeled as daily updates. Sometimes it's not really daily because there's nothing much to give for the day. So I'd wait for the next day to give some sort of information and clarity for me to make a video on it. So yeah, again, more reasons to subscribe, like the video, show me that you actually appreciate what I'm making here, and gives me more encouragement to even produce more. So yeah, please like the video and subscribe, and I will keep making those daily updates and any sort of updates I see. But so far, this is what I'm predicting, this is what I'm expecting. I'm using this tool to remind me of my structure because I pay attention to many pairs. So I use the sell or the buy tool to let me know what I'm looking for primarily on a lower time frame, then resets my mind. Anyway, now moving on to GBPUSD. GBPUSD is interesting from the daily perspective because we are actually closer to that sell side liquidity than EU is. And here we do not have any inefficiencies. Remember when I mentioned that we had an SMT divergence with EU, where EU took a previous daily high, I think it was Monday's high, and then GU didn't, something like that. So EU took Monday's high, tapping into an inefficiency, then came down, but GU didn't have any of that. It's just been more lethargic than anything. When we look at the pound though, on the daily, we just created a bearish imbalance. I mean, a bearish order block. I don't know why I just called that an imbalance. We had this bearish order block created on Tuesday. Price has been bouncing from it. We pushed down and rejected away from it. Now we are trading back into it again. Not a good sign, honestly, but we could potentially find the high of the week created exactly at the body of that candle. So pushing this aside, let's make this a bit bolder, make it more visible. Also, we can notice that there's a chance, if we remove this rectangle, there's a chance that price could come, take the previous daily high, tap into this opening price for this candle, then use that to reject lower. There's a chance of that happening. Of course, everything I say is all about probabilities and nothing is set to stone. But my invalidation idea for this bearish price action would be the swing high of the high of the order block. So I would not like to see the high of this order block swept before we push to the sell side liquidity. So this is also the external sell side liquidity that I was talking about with compared to euro, and it's also a 1.3 psychological level. It's a round figure level. It's not perfectly round figure because we can see there it's written 1.30021, but that's down by just two decimal places. So it's basically 1.300000, basically, not exactly, but basically. And yeah, I'm expecting that low to be the drawn liquidity going into next week. Of course, again, anything can happen because right now on a higher time frame we have SMTs all over the place at the lows. So when we have SMT at the lows, that also should be a sign of concern. For example, right here, I think we have an SMT that looks something like this with euro or something like this with the dollar. So be very careful. Never marry a bias. Adjust yourself accordingly based on the information and data you have. Don't try to force it when you see prices clearly pushing up and clearly being drawn to this inefficiency and you're still trying to force a sell. I don't think that's a smart idea. If we close above this order block, then we're likely going for this inefficiency. So change your bias and become bullish on this. It's as simple as that. But of course, some people are just contrarians and they can trade turtle soups ideas. I am not going to do that. I would rather trade with the trend. So that's my view on GBPUSD. Now moving on to the indices. I have very special attention that I'm paying to Russell. Remember, we've been consolidating inside of this higher time frame inefficiency, this weekly imbalance. Last week I wanted to see an internal to external range liquidity push to that swing high actually, and yeah, we rejected away from it. You can see the tail here, but then we didn't have enough momentum to continue because, as you can notice already, we had a turtle soup happen right there. This previous week came, swept the other week's low as a turtle soup, and now we actually closed bullish, unlike here where we closed bearish. So here actually pushed even more, and I think that's visible on a lower time frame because, okay, firstly let's fix our turtle soup line. Yeah, firstly we can see that it just took 1 day of manipulation for the next day to completely expand and close above multiple days. So we closed above this day, this day, this day, this day. We actually closed above last week's, no, not last week's range, because this is the 1st of October here. So yeah, if this is the 1st of October, we have the EQ already residing right there. So anything below the EQ is the EQ being the equilibrium of the month, right? Anything below the EQ is basically a discount. So yeah, we still close below, but when we go down now to a 4-hour time frame, I find this interesting because we can see, well, firstly, let me just make it transparent. Let me just make it clear to you guys that I was waiting to make a video on Russell if and when we closed above this specific candle. Why this specific candle? This is the candle on the 4-hour that took liquidity. This is the candle that ran up, took some sort of internal range liquidity here, then ran down and took even the previous weekly low. It actually made the low of the month. So this is a very important candle when it comes to liquidity, right? So I wanted to see if we could disrespect this CB, push up and close above this specific candle, because a close above this specific candle would now make it a clear, strong, high probability bullish order block, right? So we would see something like this, pushes up, closes, taps the body, then we can look for buying opportunities from there. This would have been a very clear setup, a very clear market structure, a quick in, quick out, right? But then price printed and just consolidated around for a bit, and when we decided to expand on Friday, we literally did not turn around. When we closed above this like this, I was happy. I wanted to see a retest. I set my alerts. I wanted to see us come down to it, because this was exactly what we wanted, right? We wanted to see a close above that opening price, then we can look for buying opportunities to the next liquidity levels, right? But yeah, price didn't even bother with all that. We just continued expanding higher and higher, and now we're finally obviously by the EQ, the opening price of the month. But now what has happened is I'm not going to wait for this other block to be tagged. Of course, if we somehow get very bearish to get there, I could still look at it again. But right now I can assume with data that we have that the low of the month has been created on Russell. We have gone through the first week of the month. This is the opening of this month. Actually, no, that was the opening. No, this is the opening here. I don't know why I marked that out as the opening. Here is the opening of the month. So, of course, I think this will be refined as we go down lower time frames. But yeah, we've manipulated down as we open up in the month, consolidated for a bit. On the second week, coincidence, I don't even know if you can call that coincidence. On the Q2 of the month, we made the possible low of the month here. I believe now that we are now in the expansion phase of the month. We have manipulated as much as we can. We swept liquidity here, 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 consolidated, reeling in more buyers to start stepping into the market. Then we swept that liquidity one more time, and now I believe we're in the expansion phase of the month. Because of this possible expansion phase, I am not looking for us to retrace back down into discount anymore. So I don't expect us to come down to this BC, for example, anymore. I am going to rather pay attention to the higher inefficiencies that we have now. So next week, I am looking for a drop and a possible low inside of this inefficiency, maybe some sort of tap on Monday, for example, go back to the EQ, and then maybe Wednesday or something can create the low of the week before we can look for a continuation higher. So I would like to see some sort of double purge, I guess you could call it that, a sweep of liquidity inside of this inefficiency next week. So yeah, my bias, bullish, very bullish on Russell, and very clear, I believe. So this is where I'm expecting the low of the week to form. I don't even want to see price tag into this discounted area, because when we are bullish, when we are expanding, usually the markets don't even give any chances for people to participate in the move. So yeah, I'm paying very close attention to how we react in these areas, then continue higher. Anyway, now moving on to NASDAQ. NASDAQ, the same thing, the same idea when it comes to the opening price. Let's go to the hourly time frame actually, firstly, to mark out the opening price. I think it is marked out already. Yeah, that's the midnight opening right there of the 1st of October. So we opened up there, manipulated down. It would have been nice to see a quick expansion higher to clearly make this to be a manipulation. So yeah, but we didn't get that. We just consolidated for a long time. Even after we came to Q2, we still as we concluded Q1, we still consolidated. But then towards the end of the week, we started reversing right there. We left a breakaway gap over there, and then finally started retracing to these hourly gaps to start pushing higher, right? So this is the opening price, and now we are currently inside of this bullish imbalance right here, the 1 hour bullish fair value gap. What we've done right now is create a range, right? And I think we can clearly see the range. We have the range high over there, we have the range low over here. We failed to take this high last week. We actually have an inefficiency here that could have taken us higher. We failed to take this high last week. We tapped into it, pushed up, and now we're retracing back down so aggressively. So I think, okay, let me not say I think. I would like to see price take the low of the range first. So I'd like to see price take the sell side liquidity first, tapping into the monthly opening price, because that's a very critical area and a very critical point for price to get to. And then we get some sort of shift to take it higher to range high. So we don't only look at the range high and the range low, but overall, where are we actually going in terms of a high time frame draw on liquidity? Well, let's start from the monthly time frame. On the monthly chart, we can clearly see we just created a nice powerful looking swing low over here. Let's delete this line. We have a swing low right here, right, indicating the price is likely going to take the high, which is the all-time high. So this is already a very bullish signature because of this rejection away from whatever the PDRA here is, which is just this rejection block. When we go down to the weekly time frame, we can see exactly that. We expanded away, we made a fair value gap. I wanted to see a continuation, but we came for one more manipulation to the opening price of this candle, then expanded higher. Now finally we have created a proper imbalance here. But the reason price has been consolidating is because when you look to the left, we have another inefficiency there, another imbalance. But finally, as I said in one of the daily updates, we have now finally closed above this imbalance, right? So I wasn't sure if this swing low was going to hold or not, because again, you saw on the lower time frame, as I've mentioned multiple times, I don't like the fact that we consolidated like this in order to push up. I would have preferred a quick in, quick out, not quick in, then chill out, and then decide to expand from there. So I thought this liquidity here, because of how clean these lows are, I thought they were still going to get cleared out before we pushed up. But I said, if we're going to keep it, that's fine, as long as we disrespect the high time frame imbalance. So here we disrespected the CB by closing above it. So now I can expect it to be an area of support to continue higher. So I expect us to tap here, then we continue higher. When we go down to a daily time frame, we can also see sort of the same thing. Bearish candles are now supporting higher prices. So when we look at this, we can see now this bearish candle with the body is supporting higher prices, and we had an immediate rebalance on this day, which was part of the reason I actually bought this trade. I bought NASDAQ from here and took it to the previous candle high. It was an intraday position, and notice that we have September's high over here. That's our near drawn liquidity for internal to external range liquidity run. So yeah, I'm expecting bullish price action, but I don't know how we're going to get there. I only say that it would be nice for us to tap back down to the opening price of the month, then we run to that buy side liquidity. I believe my other chart is more annotated than this. Okay, just delete that for a second. Yeah, as you can see from the 4-hour chart, the 4-hour time frame, we bounced off of this new day opening, new week opening gap that was created on the opening of the first week of October. Even though it was technically in September, it was on the 29th of September, as you can see there, on a Sunday, pushed up, displaced lower. I marked out that opening, that new week opening gap on my chart to stay here throughout the month. We can see we bounced off of it here, leaving all this as a breakaway gap, leaving the order block here as well, the breaker, everything. We just bounced on the NWOG, pushed up, and now we are respecting this inefficiency. I actually wanted to see an expansion quickly from here, but us tapping down here, not too surprising, because again we do have this rejection block right inside of the BC now. So I was thinking to myself, well, there's a possibility that we could just expand from here. So again, as I've mentioned already, there's a chance we don't even need to take the range low before pushing up. Price could just decide on Sunday, Monday, and Tuesday to continue expanding higher from here, because at the end of the day, nobody knows the future. When you check the hourly time frame as well, we still technically do have this inefficiency here. So I could also watch for a possibility of price coming. Okay, we can see here that we already tapped into it, right? We tapped into it once before, right there. There's a chance that price could come, open up, take the swing low inside of the inefficiency, sort of as a double push. If we get a lower time confirmation, like a 5-minute order block, breaker, unicorn, whatever setup we have, then I can consider taking this to September high, because now we've generated liquidity up here, and we have the September buy side liquidity still waiting for us to complete the market maker buy model from the high time frame PDRA to external range liquidity. So there's a chance we don't even need to take these equal lows here before pushing up. So yeah, keep it. This is also a top watch for me. Of course, we have Russell that I'm paying the most attention to, but I am also going to be day trading NASDAQ. And finally, we have ES literally at the all-time high right now. We have engineered sell-side liquidity there, equal lows. We've taken the all-time high already. We left these lows behind. A very sensitive area because at any point, anything can happen right here. Because right now we have a massive SMT with NASDAQ, where ES has taken the all-time high, but NASDAQ has failed to do so. Obviously, the fact that we still have targets shows that we haven't taken the all-time high. That's the all-time high right there, close to 21,300. So, yeah, anything can happen for a reversal to just start playing, start going in place. So, very, very careful. I'm trading lightly because of that fact. But other than that, I guess the next projected target for me would be the 6,000 level. I've already marked it out there, 6,000 psychological level for the E-mini S&P 500, because again, when we are at an all-time high, it's never a good idea to try and sell, but rather keep buying until your buy setups start failing. That's all. That's what ICT has taught, and that's what I stand by as well. I don't like trading contrarian positions, as I've already mentioned, but yeah, keep buying until your buy setups start failing. That's all I can say, and that's why I stand by. Of course, you could look for intraday sells and things like that, but it's never even suggested. I'd rather wait for the sells to play out, and then I'll be the one looking for buy setups after the sells has played out. Anyway, that's all I have for now. Oh yeah, finally gold. I'm looking for buys on gold. Let me see if I can get a cleaner chart. No, we can use Owanda. Let's use this. On the weekly, we have a clear internal to external range liquidity right there, ABC, going out to the all-time high, right? It's a very clear internal to external range liquidity run like this. But on the daily time frame, it's clearer because you can actually get to see the range that was measured. I measured the range out, but yeah, I think everyone else also did the same. I measured this range, the most recent range, the most recent swing low to the most recent swing high, which is the all-time high. We have a consolidation right here after clearing the all-time high again. We came down below the 50%, tapping into this inefficiency and rejected aggressively away from it. So at this point, I was looking for an order block to confirm a change in the state of delivery for me to enter the trade. We also had an SMT at the lows there where gold took the, let's just rewind to show everything. So yeah, right here we had CPI incoming. So obviously I would wait for CPI. I don't want to be ever in trading gold when we have CPI. I know it's barely visible, but you can see that we had a sweep in liquidity on all of them. Even on the futures one, futures chart, we took liquidity. So we can't really say that maybe it's a wonders feed that took liquidity, mine didn't, or something like that. You know, we took liquidity everywhere. So right here, I was waiting for a change in the state of delivery, right? And we got exactly that. This hourly candle after the news closed above this bearish candle. So now I'm paying attention to this bearish candle as a possible order block. Let's make this bolder again. Let's do that. So I'm looking at this bearish candle as a possible order block. So maybe some sort of retest like this, then a continuation higher to the external range liquidity, right? Which is the all-time high. And the weirdest thing actually happened. We got a tap of that order block, but I was not there to see, and we rejected so quickly away from it. I think we even came back later, right there. Yeah, we came back later, we tapped it again, and I still wasn't there to see. I was not monitoring my charts anymore at this point. I think I was busy with in real life things. I was busy with real life stuff. And yeah, I missed it completely. So right here we have this imbalance that could be a resistance in price. The only hurdle that I see, the only thing that could actually hold price lower, right? So let's say you bought this order block, stop loss at the swing low, or the liquidity that was taken, which is over there, and you're aiming for the all-time high. Your setup looks something like this. Let's say you have this going on your chart, right? Let's say you even left this one and you entered only this one. So cool. This is the only area that you can possibly see some sort of resistance, because we have an imbalance that was not satisfied. And yeah, during Asia, we open up a new day right there. During Asia, we continue pushing higher, and there we officially close above it. So if you were having a problem with it right now, you could have easily trailed your stop from that swing low to this order block, confirming that this imbalance that was now invalidated should hold price higher. We shouldn't have to return back to it again. And yeah, this is still Asia session because that's 22 o'clock. Let's wait for the session to close right there. We can see the day closed, the session closed. This was midnight's opening. Over here, we traded down below midnight, and guess what? We tapped the same inefficiency that could be a resistance to price. So we tapped it, barely tapped it, and then on a lower time frame we actually got entries. I remember also missing these because I told myself it's a Friday, I'm content with enough, I've gotten enough profit and I don't need any more. We had an SMT here with silver. Let me quickly pop up to silver and see if I can spot it quickly. Right there, this is 21 o'clock, that's midnight, and that's the low. So okay, here we took it, but I'm not sure which broker I was looking at, but I was looking at a broker where we had a very clear SMT. This one is not showing, and I didn't prepare for this video, so I'm just going to continue. But yeah, we had an SMT on this day with silver, and now at this point, this last down close candle, the one that took liquidity at 5 o'clock, could be used as an order block. So when we close above it, price came down to it, even tapped this inefficiency, these ones right here, tapped this inefficiency and pushed up. If you missed that, we also had another chance here, keeping in mind that okay, this was the news, so maybe you might have not taken it, but on the next candle you probably would have tried to take it, considering that we tapped yet another bullish order block. It's even a proportion block now because we rejected away from this one. So a proportion block for me could have a stop loss that's even tighter, that's even better. So you could have something like that, or put in the swing low and look at your risk reward is already a lot. It's already 5 to 1 just by being here, which I don't know if we get tagged. Yeah, we actually smashed through it easily. So yeah, you could aim for a solid 5 to 1 R with that proportion block. The reason you could still hold this trade is because our target has not been met yet. We had this buy side liquidity here that we just tagged right there at lunchtime on Friday, and then of course we have the terminus, which is the all-time high right there. So yeah, I'm still bullish on this. I would say any inefficiencies you find on the hourly, because that's our confirmation time frame, right? We're working with a daily PDRA right here. So on the hourly chart, if we are really bullish, we should respect this inefficiency and continue higher. At the very least, we should clear these unswept liquidity. We have that buy side liquidity there, and we have this one right here. I am looking at the nearest one right here. So I think and believe that this inefficiency should hold up for higher prices. On the 4 hour, we also have an imbalance there on the 4 hour, but I don't even want to see this 4 hour one tagged yet. I don't mind us taking this high, trading back down into the range, then come to the 4 hour to continue for the all-time high. But right now, I would like to see this hourly one as we open up on Sunday tonight. Actually, it's 3 a.m. right now, so later tonight I would like to see us run the highs, come down into the range in the 4 hour, then we can continue higher. Actually, even that setup looks nicer in my opinion for silver, the 4 hour one. Let's go to the silver chart. We can leave this here now as a breakaway gap. We invalidated, we disrespected this CB, and we could look for a continuation from here. Again, this is not a signal, this is not a trade advice, this is not a recommendation on how to spend your own money. You worked hard for that money. You should know what you're doing with the money itself. But this would be something I could take. You could look for tap into this inefficiency, trust and hope that based on data, this swing low will hold. And then we'll continue higher to that buy side liquidity. So that could be a possible play for next week. And yeah, I know this was a very long one. Probably got bored somewhere along the way. But I'm just gonna end it with remember, it's never your technicals. If you feel overwhelmed by all the technicals, just flip a coin and decide whether or not you're going to be buying for the day. If you're gonna be buying for the day, you tell yourself, when midnight price opens up, I'll buy below the midnight. I'll have a 100 pips stop loss or whatever, and then I'll just be targeting for a 10 pips TPU, whatever it is, whatever your rules are. Literally, a coin flip is enough when it comes to technical analysis. None of everything I just said now really matters. At the end of the day, it's all about risk management, money management, and management of your emotions. Because whenever decisions are made out of feelings, it's never the most logical, of course. And we're dealing with the charts here, the markets here, and money, which is literally all logical. It's all numeric. So yeah, I would say be careful, work on your growth, work on your individuality, stay safe, good luck, and good trading.
Empty eyes, they break me down. Will this torment never end? Endless pain, it's all I know.